This is a trade recap for Monday, March 23rd, 2026. Let's go ahead and get into it. Continuing on with phase 2 of one and done. This was number 8 of 10 over the weekend, and kind of thinking about it. Again, we're going to stick to the 10, just like I originally set out. We're going to hold to that and go from there. Basically, the rules of one and done, the exercise that I'm currently doing. You're only allowed one trade, and that's it. Hence one and done. This is phase 2. So the way this kind of changed is size increase, went from 1 to 2 contracts to 2 to 4. So basically doubled the size. That's 2 contracts max for a starter, and then 4 total position size. And the only other caveat there was if a red trade is taken and a reset trade has been planned for, that reset is allowed, and that is the only additional trade, period. And that's just, again, a healthy mechanism to have in place so that you can respect it to, again, recover any losses that, because some trades just don't work. And that's that. But with that being said, let's go ahead and get into what's going on. So pretty sizable gap up this morning. That was interesting. The market was basically looking almost like for any reason to kind of pop after how we closed on Friday after that pretty big sell-off. But yeah, price action was decent. Levels were very wide. So given these circumstances, my coach and mentor, Pat Mitchell, definitely advised caution and listening and paying attention and doing things right. But that is one of the advantages of having a coach and mentor. So if you are someone that is looking for a high-level coach or mentor because you are either new or struggling with day trading, Pat Mitchell over at tricktrades.com is the person you want to go and learn from. He knows exactly what he is doing. He proves that day in, day out. He's been doing this on a professional level for over a decade now. And yes, you will get, as long as you put in the work, you will get sorted out. There is no guarantees, obviously, because, again, this does require a significant amount of work on your side. He can point you in the right direction. He can give you the lessons. He can give you the guidance. You just need to absorb it, put those recommendations into action, and straighten yourself out, and you'll be light years ahead of where you probably currently are. So again, like I said, if you're interested in that, go check out his website at tricktrades.com. Look at the service, sign up for it if you're interested. If you want kind of a preview of what he offers, again, he does have a YouTube channel. He has over 1,700 videos on there, recaps, lessons, going back a very long time. So if you want a sampling of the information that he puts out, you can find it there. It is not everything. The good stuff is, again, live on screen share every morning while we are getting ready to and in the act of trading the morning session. Now that we are got that one out of the way, let's go ahead and jump into the charts. Okay, so lay of the land here. We only trade SPY and Qs. SPY is on the top, Qs is on the bottom. These left 2 charts here, these are the daily charts, so these are daily candles. In the middle here, 1 minute intraday, and then while it's not present now, I usually keep my order management execution here on the right. These blue levels that you see plotted on the daily, these are the levels picked out by Pat the night before and refined the morning of, and then a trade plan is built by him for the traders in the room. And that is basically how that works. These levels do not change in any way, shape, or form once they are plotted. They're static, because that is how the strategy and the trade plan goes. If you throw levels down, then you start monkeying with them, that you're not following a strategy or a plan. The red risk levels you see plotted on there are something I personally put on there. Pat does not have them on his. Others don't use it on theirs. It's just a personal preference. So we close down here on both SPY and Qs. Let's pull up the recording so you can kind of see we were closed down here on Friday, and then we gapped up basically almost to where, again, we opened and even above on SPY. So that is a big gap. I think it was like on SPY, it was like, what, 13-point gap? Okay, that's a big range. So I'm saying you got to kind of plan for a few things when that happens. First thing that I know I would, take note of is options premium. It's kind of probably going to be a little silly because of volatility. And two, as Pat pointed out to us, was the wide range of, again, just the price action. And the fact that like some of these candles that you're going to see on here, again, they look like typical candles, but when you actually kind of break them down, you realize they're 50 cents to a point a piece. What looks like a normal candle is actually fairly wide range, so it's something you need to take into account through your risk management. So with that being said, this is about 10 seconds before the open. Go ahead and hit play. Originally, we just wanted these outer levels on both. That's light blue kind of intermediate level, while it's a valid level. We were kind of opening right on top of it. So it was one of those things like we needed distance. So we had to see exactly where are we going to open up? How are we going to, again, play out for the first few minutes? Do we create enough, distance from it to make it valid again and whatnot? So we'll just let that keep on rolling. So as we see, we come down, getting close to, again, those long levels, especially there on SPY a little bit. So again, change things around just to be ready for it. Go ahead and step forward a little bit, kind of starts coming back up. And this is one thing with these wide ranges, you've got to wait. Like Pat was very adamant about that. This point, like wait for the levels, like wait for your levels. Otherwise you will miss timing an entry here. Could very easily be, again, result in a decent loss and something you can't necessarily average out of, because given the wide range, you're going to manage your risk by controlling your size. So again, you can't get as much size in, you can't correct as much, and all of a sudden it's like, okay, now you got yourself into a situation. So just get the charts adjusted in, really watch. So it's coming down, getting close to that level. Still, again, roughly a point from that low on SPY. Q still has a ways to come down. So just, again, trying to be patient with it. Comes back up, and it's like, okay. So one thing where it's like potentially get readjusted here to potentially take a short. But again, kind of just floating in between, like it's trying to sort out what it wants to do there. It did, again, spiking up into the 5 EMA along with Qs and kind of reacted there. So there was that. And then again, coming up in to this area right here, that initial kind of level, which we weren't sure we were going to take because we were opening up on top of it. Just kind of letting it play. Going to get things kind of adjusted because it looks like it's going to be the one. I was, again, trying to see if it's going to pop into the level right here. Just waiting for a green kind of push. Didn't really get it, so I decided to enter. Not the best, but again, it is what it is. And again, with the way the volatility in the range, it's like first reactions, like just pay yourself and go. Like don't, again, Pat was like, do not try to ride this out unless you really know what you're doing. So on a decent reaction, even like that, it's like, okay, it looks like we're already coming and getting that reaction. So those things where it's like, again, I don't know if you guys saw it, but again, there was a sell there. So yeah, and that's it. And again, it was just a singular contract because, again, controlling size for risk, so it was only $23 profit. But again, small, steady, incremental wins like this is how you grow a small account, which is good. It's what we want, especially on days like this where, just a little bit of like just using your normal size. If you're not ready for that, like you can get yourself in deep waters. But all in all, it's kind of how that went. And then, as you can see, even more follow through. And then, yeah, that's pretty much how that morning session went for the trade, which isn't bad. So here's the actual live charts, as you can see. Dumped out, came down, then again, that was basically it. Then it came back up. But it's also one of those things where, again, scrolling this out a little bit, I mean, this is pretty volatile day. And the problem with volatility, again, one of the aspects of volatility, I would say problem, especially in options, is like if you're trying to ride this, waiting for this, because you're trying to play this, or again, whatever, it's like, and you mistime it. Not only if you mistime the actual level and getting, again, too far away to where the follow through that you need to get that trade to work. Again, so it just skews everything to where it may not actually work, especially when you get that first reaction. The other part is, again, meltdown. When you get this level of volatility, it's like this can move back past several strikes pretty quickly, and all of a sudden your position melts down. It actually comes back down to kind of where it would be, because it's moved so far away, your meltdown was way more. So how much more does it need to come down if you were, say, had puts for it to actually work out? So it's something you got to really, really take into account these wide range volatile days, because there are a few factors that can kind of work against you. But if you take them into account and you adjust for them, it's one of those things where it's actually not that bad. Probably the biggest thing I would say I look for is the premium price. Like, how, again, messed up is it? Or how expensive is it? And it's one thing, you adjust your size from there. And hey, guess what? If the price for the appropriate contract is more than your total starter position size, and hey, guess what? Don't take the trade. It's like just that simple. It's one of those things, or wait for outer levels, because again, by the time those outer levels test, potentially maybe the options premium resets a bit. Again, so those different aspects to where you just have to, it's like a, again, balancing scale where you just have to make sure you got everything kind of in order. But all in all, given the range, volatility potential, is something I would call a good day. Again, lessons learned, no real emotional or discipline issues, follow the trade plan. I would say, again, didn't necessarily top tick the entry there. So again, a little cleanup right there on that part. And that's the only thing I can really think of to critique. Paid on the first reaction. Granted, had a little bit more follow through, but I'm not looking, again, it's that first reaction that I'm still looking for. So yeah, I would say good day for the most part. Hopefully everyone else had a good morning and you enjoy the rest of your day, because that's all I got. If you're looking for a high-level coach or mentor, again, check out Pat Mitchell over at tricktrades.com. If you want a discount on your first month of membership because you want to give it a shot, look down in the description below. There's also a link to the SizeUp webinar if you're looking for more information on the structured approach Pat has for new and struggling day traders to learn to do this properly. That being said, have a good one, and we'll see you for the next one tomorrow.